Welcome to the MHP Exchange, where the riches are in the niches. We'll show you how to invest your way into mobile home parks with real strategies, tips, and behind-the-scenes know-how to grow your cash flow. Stick around. This is where smart investing begins.
If you downloaded and you're streaming this episode, you know you're on the MHP Exchange podcast, and you know it's Frank Rizzo here with you. And today I want to talk about shiny objects. And for those of you who are not familiar with that term or with that term in real estate, it's every year it starts. There's a new best strategy in real estate. Every day, every week, something crosses my desk that could make money. And most investors look at the market and they say, well, the challenge is access or timing. The real challenge that any investor has is attention. And so here's what happens. I mean, you look at the different opportunities that might come to you as someone who's looking to invest in real estate. Or you have a friend that's doing one thing while you're doing something else, and someone tells you they made money and they've bought some small bay industrial and that's doing phenomenally well with them. And somebody else is flipping houses and who's got an Airbnb. And every one of those deals look smart, especially when you're in the middle of your own and you're hitting that roadblock or you're hitting that challenge or you're hitting up against that wall. And so all of a sudden you get the idea that maybe I should be doing that too. Maybe I should adapt. Maybe the market is shifted. So I'm not going to quit, but I'm going to do something else. And I'm still investing in real estate. So maybe I'm chasing the wrong thing, but maybe this would be easy or easier. And so maybe I should go down that path. And so here is really the big mistake that investors make. It's they don't make the mistake because the asset class that they're in is wrong. They make the mistake or they fail because they never stay in there long enough for the compounding effort of their work to really count. And that's what we want to talk about today because I see it. I see what happens, especially, look, if you found this podcast, you're on some social media platform. And when you're on social media, you're watching that and you see people, whether it's in real estate or investing, social media rewards that novelty. It rewards that notion of look at the success that we've had real quick. It doesn't necessarily in a 30-second or 60-second clip or 90-second clip show you the mastery that it takes behind that. And so a lot of what you get, a lot of the content that you're consuming, you'll find what's working right now. And it looks like there's progress in that other space. And so when you switch, it helps you avoid that wall that you come up to, because now here I'm in this asset, I'm in this class, whether it's a mobile home park or whatever other asset class that you're in. And now that switch becomes exciting. It's learning something new, right? And you can get over that discomfort of getting past that plateau. But here's the hard truth on that. Like every time you pivot, every time you go to pick up something else, you reset that clock on learning. You start all over from the beginning, and you need new systems, new processes in place to make that work. And you might not know what you don't know. And listen, your friend might be doing phenomenally well in Airbnbs, but make no mistake about it, there was challenges along the way that they had to overcome to get really good at what they're doing. And regardless of the path that you choose, whether it's a short-term rental, whether it's multifamily, whether it's mobile home parks, whether it's commercial or retail, there's going to be that roadblock in the way every time you hit that new plateau. That is inevitable to end up happening. So be aware of that, and be aware of that while you're looking at those other deals that may be taking you out of that area where you focus in. And I will tell you from personal experience and running a team here, and my 25-year history in real estate did not start in manufactured housing. And it started in, speccing 1 and 2 family homes inside the New York City market. We did condo conversions. We were involved in commercial. We looked at redevelopment plays. I touched a lot of different spots to find out what I liked, what I didn't, where my sweet spot was. And then when I picked a lane, I stayed in it. And I've been in this lane, started 13 years ago, and really for the last 9 years, solely focused in the manufactured housing space. But even myself, when you look at what's happened over the last 2-3 years, where it's become more challenging to find deals or the velocity of deals, or you hit some of these natural stages of growth where you're like, all right, here's where we are, and here's what it's going to take to get to that next level. And you find a deal that comes across your plate. You're like, wow, this looks tempting. Maybe I could move this into garden style apartments, or I could look at some small bay industrial spaces where other people have done phenomenally well, and there's a market for it. But it's in knowing where my unique ability lies, where my team is comfortable, and sometimes the best decisions you make are the ones of elimination rather than just diving in and doing everything. And it's in that having that temptation isn't weakness. I mean, that's human, right? You're going to look at those other deals. You want to stay alert to what's happening. Giving into it and all of a sudden shifting that focus, that's the issue. It's natural to look. Obviously, you want to see what's out there, but you want your decisions on what you're doing and where you're investing not to be emotional and not to be trying to chase a trend or a fad. You want it to be focused. You want to know what that outcome is going to be. And you want to consciously be able to cut out the things that do not fit into that North Star. For myself, I know, you set whether you have your 10-year goal and then you have your 3-year goal, and you look back at where you need to be inside of 12 months, it's constantly making sure that the decisions I'm making on a weekly and on a daily basis are focusing on what we're looking to pursue and not being distracted by that shiny object that somebody else might be presenting to you, regardless of how good it looks. Because in the short term, while it might be nice to do, if it doesn't align with your vision, if it doesn't align with the pathway forward, then it could be a good deal, but it just might not be a good deal for you. So here's where the operator really gains his advantage. And there's a great book that I read, and I highly recommend it. It's called The Compound Effect, about how little decisions compound over time, right? And little changes that you can make really make a huge difference. One of the if you're looking to lose weight, but you drink soda and have a bag of chips every day, just doing that, regardless of everything else, that starts a big change in everything else that you're looking to do. By eliminating the soda and maybe that bag of chips, you feel a little bit better to do more steps and to take more of a walk. All of a sudden, those little changes over time compound on each other, and it helps you get to your destination of where you want to be, and helps you there much, much faster. And it, from an operator, an investor's point of view, by being defined or staying in a defined asset class, what happens? Your ability to recognize patterns gets so much better. Your decision making becomes so much faster, and you have fewer repeated mistakes because you've seen it time and time again. And so what happens here? You can understand the cycles better. You understand what doesn't work as much as you get to know what really matters. And that, my friends, is so critical when it comes to investing, right? Or business, because it is that ability to repeat that process over and over again, which makes you faster, better, more efficient, and make more money. Look no further, and I'm if you know me, I'm not a fast food guy, but look who sells more burgers than anybody. It's McDonald's. And we'll go back to this because it's, you have to look at this as the way you invest as well. They sell more burgers, not because their burgers are better. It's because they figured out the most efficient way to deliver the burger. And they knew, if you've ever seen the stories on Ray Kroc, they knew they didn't want to sell when they started. They didn't want to sell chicken. They didn't want to sell anything else or hot dogs. They wanted to deliver you the burger faster and better than ever. And obviously, as you grow, you could do other things. You could add other things to it. But in the beginning, they knew that they had to deliver that product better. And you have to look at your investing business the same way. Where am I going to be? What am I going to focus on? How do I become the best I can at that? And that only happens by compounding and following that same process, a repeatable process, over and over and over. Now, that doesn't mean that other deals aren't going to find their way to your desk, because I have a plethora of deals that's being sent to me from brokers, other deals that come to my desk, and some of them are really, really good deals. Some of them would make somebody a lot of money, create a lot of value. They're just not right for me, because I understand that if I concentrate my effort on everything, I'm really not concentrating on anything. So I want to focus my effort and become, the best manufactured housing operator I can be. So, and by doing that and by having that focus, it's brought us into one of the top 100 operators in the country, and we can continue to grow on that from that. And that's from a focused effort. And I'll use this analogy. If you look at in the town that you're in, you could look at the general practitioner, right? Your doctor, your generalist, who knows a little bit of everything. Or would you rather be the world-renowned cardiologist who specializes in one thing and one thing only? So you might not go to them for everything, but if you have a heart issue, that's the person you want to go to. So you have a choice in your investing career. Do you want to be a specialist, or do you want to be a generalist? Most investors, they're generalists. And that could work, and you could be successful doing that. You could be okay doing that, right? So I'm not telling you now, if you own a retail strip mall and a multifamily and a industrial, you got to sell that, right? Because you might be very happy and you could do well doing that. But if you're really looking to grow your business, if you're really looking to hit that next level, then it's focus. It's that focus that allows you to pick up that attention to detail, the minute differences, that allows you to pick up the patterns faster and identify what's really a good opportunity and what you need to make that opportunity work, rather than getting maybe average returns in average deals. So listen, this is not, as an entrepreneur and you're listening to this program and you're involved in real estate, you have that entrepreneurial spirit. So it's normal for you to want to find different competencies and find out about different asset classes and investments and structures and what they're doing to make it work. I mean, that's normal, right? And that's good. And that will help you grow your business anyway to see what might work in what you're doing. But I will tell you from experience that mastery in one specific sector, that compounds over time. That focus, the more you can focus, right, on in one space, the more you can do that, that will create leverage for you. And those challenges that you might see, that might be why that shiny box or that shiny object looks attractive right now. Inevitably, as you grow, you're going to run into those challenges again. They're not going away. So look at it, appreciate it for what it is, but know who you are and what you want to be. And I would just tell you, ladies and gentlemen listening out there, make sure that the decisions you're making is not just what you want to do, but what you don't want to do, and deprioritizing things or making decisions consciously not to go down certain tracks if it doesn't fit in with your North Star. I hope you got a lot of value out of this episode, but I'm going to, and if you did, I'm going to ask you one favor. Would you help other people that you don't know, someone you don't know, would you help them find, fund, or operate their next real estate investment? And if the answer is yes, then I'm going to ask you to do one thing. On the streaming service that you're listening to this program, rate this episode, because that's how we help get this out in front of more people and talk about real estate investing and mobile home park investing in particular. So if you do that and you send us an email of that rating, I will send you a copy of our after site visit report. It's the same report that I share with my team after our team has gone down on site to make sure that the ground team is operating the asset the way it needs to be done, to make sure the business plan is being executed and keep everybody in line. So until next time, everyone, this has been Frank Rizzo with the MHP Exchange podcast. Happy investing.